if there's opportunity or debt or anything like that, I can talk about the website and just the different features that we have. I don't think I've actually talked or walked through this at all. So yeah, so it really has been a while since we've done one of these.
Yeah, I mean, geez, what was it? I mean, it may have been October when we did the last one. Remember?
No, I don't think it was like, you mean like 2 months ago?
Maybe it was longer than that. I don't know.
I would actually think it's more accurate to say October of last year.
Is that
But
right?
I know, but I know we did some. Like,
Maybe it's
I don't
been a
know.
year. I tell you, I can't keep track of time anymore. I turn around and it's Friday again. Really?
I know, right?
Same.
It's option expiry day again.
Yeah. Good and bad. Good for when you want the ones to get off your books, and bad for the ones you got to keep, managing and fighting with.
Yeah, tell me about it. Yeah. All right, we got 2 people watching so far. All right. So what were you doing? So Kyle, you went to an estate sale?
I did, yeah.
Yeah,
I had a bunch of
yesterday or
today.
Today. Cool.
Yeah, a bunch of vintage books, some interesting vintage Playboy stuff. Not like magazines, but bar stool stuff, mugs, playing cards.
Nice.
I guess there's these things called Playboy VIP clubs around the country. They've been shut down for decades, but this guy was part of the VIP crew, so he got like golf memorabilia with Playboy stuff on it. It's pretty rare stuff. So.
Oh yeah, no doubt. Yeah, like so it just had like the Playboy bunny ears and stuff, or yeah. Right on. How about you, Uzi? What were you doing this morning or today or this week?
I tell you, I mean, I spend a lot of time, trading, going over strategies. I spend so much time in the office. I just love all the possibilities that we can do with. I'm always trying to come up with a new idea, maybe a new strategy, looking at charts, finding something that, we can take advantage of. But aside from that, just spending time with my family, and just doing stuff around the house. You guys know when you own a house, man, you got a million things you can do. Something's broken here or something you can upgrade there, or maintenance. Yeah. So
yeah.
Other than that, just
I have a long list to do.
And working out. I try to go to the gym and walk. I mean, it's healthy body, healthy mind. So
right. How often are you going?
So I hit the gym about 5 days a week, and I'll walk.
Hey, right on.
I'll walk 7 days a week. I try to get 2 miles in a night. So
oh, cool.
Great. I get so many good thoughts. Some people think it, when they're in the shower. Some people think when they're driving. I don't really drive much, so my walk-in is I do so much. Like things hit me, and it's like, wow, I can't wait to get home before I forget what I just thought about.
Yeah.
Like sometimes I'll even tell my Google Assistant, hey, remind me in 15 minutes when I get home.
That's awesome.
Yeah, just just trying to stay healthy and.
Nice.
Important.
Right on. So I don't know, like if people aren't really. We've got 2 people on so far. Just ask them if they have any questions.
All right, cool.
Any questions? Let us know. Happy to answer them. Oh, it's fun. It does it twice for me. That's weird. Got nobody on stage with us.
People are shy. Not many people like to let their face be seen, or their background and from where they're trading, and who knows. People are weird.
Yeah. No, I totally get it. Some funny like memes and stuff in the lounge last few days. That one was like the Michael Berry, and he's like, Nvidia's plus 3%, Palantir's plus 4%, and then Berry's like staring at the screen like, what the?
Hey Steve, before we go live, I don't know if it's.
Oh, we are live.
Oh, we all live. All right, good. Then I won't.
Yeah, we are live. Yeah, so don't tell me about your those secret passwords.
I had a new trade idea.
You have a new trade idea. Yeah. We're gonna start trading sugar futures.
We're gonna trade, sugar futures.
Yeah.
Sugar cane.
Sugar cane, nice. All right, Kyle. Let's jump into the red candle theory. We got 2 people on, but we'll record this and we can share it and give you an opportunity to step through it, and then maybe Uzier or myself will ask you some questions.
Sure.
Now, for because I know you're thinking of talking about the .com era on that. I think it lines with that, right?
25 years, yeah. So each of the
25 years. So now, just
major
for a
corrections.
little bit of context, now all of us were above the age of 18, let's call it, around that time. Like we were all able to invest. You know,
Yeah,
it's
I
relevant
started
to
in
our.
2001.
Okay, I was there. I remember hearing about it, and I was in university at the time, and everyone was like, "Hey," because I did like a comp sci type of background on university, and it was management of information systems. It's technically under the business faculty, but it's management of infosys.
Same.
And our professors were telling us, you're graduating and going into the workforce at exactly the wrong time. You're never going to find a job in IT. It was doom and gloom, my friend.
That's funny.
That's crazy.
Yeah. So, a lot of people lost a lot of stuff, including like homes and stuff, because it was they were leveraged in on a few terrible positions and stuff. So, anyway, I'm curious to see how you're going to tie this together. I'm looking forward to it. Okay, while you're getting that started, I'm going to advertise it in the Discord.
Okay, so a couple Fridays ago, I think maybe 3 weeks ago, I was kind of poking around on the charts. Like Uzi said, I like to dig in there to see what I could find. I like to look for patterns, symmetry, things like that. And I noticed just a huge down red candle on October 10th of this year. And I had been saying since that time in the Discord that it was kind of a change of character in the market. It seemed a little more sluggish. That was massive, obviously, institutional selling on that bar. You could tell by the size of it. And 3 weeks ago, I was like, well, let me look back at like previous, major sell-offs and see if there was any kind of large bar like that. And I was surprised that there's one in every one of the major sell-offs to 2000. And so my theory is that we are in some sort of distribution time frame when we see that big red candle. It doesn't mean that's it and it's going to sell off. Looking at previous sell-offs, it can take up to 100 days after the red bar shows up before the actual dump happens. And that's because, of course, their institutional money has tons of shares, and it takes months and months for them to sell it out. So let me just kind of explain distribution real quick. I've talked about it a lot, but it's a gradual sell-off of a large quantity of an asset, stocks, options, etc., over a period of time. And so the longer that period of time is, the bigger the sell-off is going to be, most likely.
Okay.
And I talk about that in general, not relating to this, just that the bigger the base, the bigger the move. So the longer something coils or goes sideways or chops, the larger the move out of it, either up or down. So in a distribution period, it makes sense for that to be for the down action.
Okay, so I'll just ask you to pause there, Kyle. Do you want to bring up a chart or do you want me to bring up the chart? I just want to get off the screen from our homepage and move over to a chart so we can start looking at.
I can share mine. Let's see.
Yeah, that'd be awesome. And guys, if you're online, if you're watching, send in some questions. You can send them over the YouTube chat or comments there that we have going live. Or if you wanted to, you can also join us on stage and we'll bring you on and you can ask it live. You just ask that you do something.
Can you see that?
I can, yeah. Let me just add it to the stage here. Remove other media platform. All right, you're live, brother.
I have some notes here. I'll go over that later. But so here's the current, area that we're in the market, and this is the October 10th candle, and you can see it's the largest candle we've had since the April lows. I mean, it's significant.
Yeah. You have the volume. The volume on there.
I don't use volume typically. Let's see. Some error message with volume. Huh. Volume's not working right now. It's giving me an error message.
Yeah, no.
So no volume data. The data vendor doesn't provide volume data for this. Okay, it's SPX, guys.
Yeah, no, I got you. Yeah, so it's pretty good. Yeah.
So let me reset my chart real quick. It's a little bit squished.
Yeah, SPY would show it. Yeah, definitely.
Okay. So basically, what I looked at was what happens after. Let me go back to the daily. This big red bar happens. And so in previous times, let's look at the pre-tariff sell-off. And basically, I'm kind of counting this gap up here as the beginning of distribution. You could also say over here it was, but I think this gap up, we'll count that as all of distribution. But you can see right here, there was a big red candle on December 18th. And the market continued, chopped around, broke below that low, came back up, made a new all-time high, chopped around and made another new all-time high before falling away. But then what I did was, okay, how many days did that take between there and the actual breakdown? About 77 days. So I went back and I did that same kind of study for all the various sell-offs that we've had that are, major, 50 to 50%. And every one of them has that big red candle. Even COVID, I had explained this one, which surprised me. I skipped that one because it's a black swan event. But even COVID, obviously institutional money didn't know it was coming, so they couldn't distribute beforehand. It was a surprise to them as well. So there's not really a big red candle before the sell-off. But as soon as this big red candle, that's institutional money, happened, they were still early to get out. They got out in a massive breakdown. It did retest that area too. So it even works on black swan events. It's pretty wild. The characteristics are always different. Like here's September 2018, had it, and then the market dumped and tested it for a while. Again, this is
I can see it's clear as day when you're able to see it. Like in retrospect, like the multiple retests are areas where you can get positioned if you missed it the first time. Now,
right.
You got to wait a couple of weeks or so, depending on how long in between those retests are. But even if you missed the initial, like you're saying, you could have gotten those retests.
Right. Yeah. So the earliest a breakdown happened was that 2018 one. It was 55 days afterwards. We're way above here, so and today's 56, so that's not happening. But some of the other ones took 77 days. We just looked at, so that would be end of December, and this is just if it repeats.
Right.
Every one of them is different, so we never know. But the longer this takes, the bigger the sell-off, because the 2000 and the 2008 sell-offs took 200 days, 250 days, and we had 50% sell-offs. And that was 200 days post breakdown. So there was also some distribution before that, just not on a scale as big as that first indicator. So what I'm trying to decide is, or decipher, is if this is going to be distribution and we're going to have a major sell-off. And you have to be patient, As we saw here, the market was able to make 2 new highs before it actually broke down.
Yeah,
So
a couple of fake outs for sure, right? Those 2 fake outs, and then it got them,
Yeah, that's why it's a theory for now. Backed with a lot of data, but I don't really trust it quite yet as a theory.
I agree with your theory tremendously, Kyle. And I'll tell you, you brought up 2000 and stuff. Some of the guys know. I know Steven knows. I was trading back then. I was day trading back then, stocks. Traded options, but mostly most of my money came right from the top of the .com bubble. We were short, and we stayed short and kept shorting all the rallies.
Nice.
And those were the glory days, because while we didn't know it was going to be one of the biggest bubbles in history, we knew that it couldn't keep going on forever. We would wake up and stocks, some of them were still around, Oracle, stuff like that, would be gapping up 30, 40, 50, 60, 80 points a day as the .com era was just coming into play, where this is going to be the next biggest thing. And everyone was buying into it until they started to put numbers together and say, wait a second, we're at least 5-10 years out. Like we maybe with this AI profitability type thing,
Yeah, I am in agreement that it will pop, but I think we have years.
Yeah.
3 or 4
I think
years.
once we do, like your chart showing, once we do show that, those recent areas where it bounced from, it's over. We'll get a couple of attempts, retests too. If we miss the first one, we should be able to get at least one retest.
Right.
So with the dot-com bubble bursting, and that's great that you were making a lot of money off of all of my boomer friends that were trying to invest at the time. Uzi, that's amazing to hear.
But again, we didn't know. We just knew it was just overblown. We didn't because
So like in those months leading up to it bursting, right? Those adults were listening to the stories and buying into the FOMO, right? They were buying into the story. They were buying into the FOMO. They didn't want to miss out on what was generational wealth. I'd love to like go back and listen to some of the narratives and storylines back then. I know they were saying everything's going to go online. You can order a pet. You can order anything and everything online.
Yep.
And I think to a certain extent they were right. They were just 20 years too soon. I think now you can buy everything online. Maybe a pet is still kind of difficult, but you can basically buy anything and everything. And it makes, for example, holiday shopping a whole lot easier.
Yeah.
But I think what happened though is like I think you were showing kind of too in that, Kyle, is that like the big money, the smart money started to clue in that like, hey, underneath the hood, they're just venture capital. They're just taking in funds from everyone else, but they're not generating revenue. They're not generating profit. And so eventually this is going to come to light, and therefore we should short it. And I think that's what you were doing. Is you guys were saying, hey, look at the data behind this. There's no money coming in or very little. Let's short this thing. The fundamentals definitely weren't there. But I think what's different though, perhaps with this AI run, and maybe why, and this could even lead into what you're thinking, Kyle, this might take a long time to process and to come to fruition, is that a lot of the big names that are driving this are actually making money and pulling in revenue, and they are expressing CapEx expenditures for the following year or the year after. I think what happens is like the software companies or the service providers of the AI have to start delivering on the promises of what it's going to do.
Right.
So like NVIDIA is generating massive revenues, but they're supplying those GPUs to, for example, like Intuit or for Meta or other companies that are going to be starting to use these picks and axes, if you will. If those guys deliver on the promise and can actually generate the revenue, it could hold up, right? It could take longer to distribute the top before it starts to come down.
For sure. Yeah, I think the top that we're doing now, if we have one, it's not going to be a major one. 15% correction next year to 20 maybe. So it's not the AI bubble top. I think that's going to happen near 20-30%.
Could I add one more thing before I forget? Because I'm getting old.
Yeah, for sure, Uzi, go for it.
So back in the .com era, right? What I find a similarity to, and I've told a few people about this because they weren't around back then. So we had a guy, his name, I'll post it in the chat. His name was Henry Blodgett. Now, this guy was similar, in my opinion, to, what's his name? Lee? What's the guy's name? Is it Bob Lee? The guy who's talking about ETH and Bitcoin. Tom Lee. So Tom Lee is a permabull, right? Tom Lee has got a huge cult following. This guy, Henry Blodgett, which I tried to post. Yeah, if you just Google him when you guys have a chance, whatever. This guy was always on CNBC, always on the floor. And he's saying, this .com is going to be the next, you got to buy. I mean, and if there was a sell-off or like a little bit of a pull, never a sell-off, but a pullback, you got to buy. And he was later convicted because he was in cahoots with all these big firms to just promote the market. Get people into this market, sell. Not sell. Sell the idea that you have to get into this market. Now, I see Tom Lee talking Ethereum, ETHA, BMNR, Bitcoin, and it just, to me, it's ringing this resonance. It's resonating in my mind. This guy seems like a shill. Now, I don't want to libel him, and I don't want to sound like I'm, anti-stocks and stuff going up, but I just see the similarity that he's just bull, and he's been so right, but is he right because he's got a huge following and he's affecting the psyche of the participants involved? You know what I'm saying? I mean,
Sure,
I don't know.
Yeah, he's been extremely wrong on BMNR for the last months. And, that could be distribution, is that these people continue the hopium and the good narrative on TV, on their YouTube, through their firms to allow big money or whoever to sell. That's part of it is psychology. So, what do you think next year is going to be like, both of you?
I don't know. I think we're due. I think it's going to come.
For beauty here, Susie, I'll let you go first.
100%. That would be 100% meme right there. So I would have. Look, I've been waiting for the pullback. I got caught shorting a couple of things, as you guys might know from my positions, but because I was been too early. But I do think it's coming, and probably when we least expect it. Maybe after the holidays, everyone's gonna be all happy. Maybe with the rate cut, everyone's happy. The markets is maybe doing good. We might get that last year-end bump up after the rate cut, and then I think it's coming January, February, where the dust starts to the shit. Pardon my French, starts to hit the fan a little bit with some AI companies. I mean, didn't we just hear? So I think Meta just announced that they're going to be cutting back on some of their spending. I think it is toward their their AI type things to save. I don't know. I forget the reasons why they're doing it, but I think that's the first like little inkling or news bite to come that a big name Mag 7 stock is looking at the money that they're spending on this, and maybe they're going to cut it back a little bit. And I think if you get one or two more that say, you know what, I think we should probably do what Meta's doing. Let's just cut back a little bit. Just cutting back a little bit is all you need to hear. That, oh, wait a second, they're cutting back a little bit. And then once the market thinks that AI might not be what it is being laid out to be, even though it is great stuff and it's already being used to make money and help the world, it just, the expectations are just way up so high. I just think that it's going to be, could be part of the reason why we get the that first down like you're talking about, Kyle, that next big red candle,
right?
Because if it isn't AI, what could it possibly be? We're not going to see another plague, right? Interest rate cuts we know are probably coming. The next Fed chairman, who might he be? But we already know he's going to be friendly to Trump and make things even more lower interest rate, a lower interest rate environment because Trump wants that. Mm-hmm. So that won't be it. I mean, who knows what it could be? But I don't know what else could it be. I think AI right now is the biggest thing promoting the markets to higher and higher levels.
Interesting.
So no, just one of the thesis I have is that I do think that AI eventually, and it may not be in this cycle, but it could be in the next or maybe the third, but AI is going to start replacing a lot of white collar jobs. I don't think we need as many, say for example, like bookkeepers and accounting. A lot of that can be replaced by AI. It's easy enough, it's repetitive enough, it's mathematical enough that they could do that, for example. And I think I read in like this year so far, 1.1 million people have been laid off in 2025, which is the highest since COVID. And this has nothing to do with a pandemic or anything. It just has to do with continual layoffs through this calendar year of people being let go. And, they never really truly come out and say it's because AI replaced you. They come out and say we're right sizing or correcting or whatever the narrative is. It's never directly tied to AI, but I think below the curtain, we all kind of know it's because of that. I think what I would like to see happen is, okay, so we had like a .com bubble burst and that kind of lowered and went below the value of what the internet was at that time during the early 2000s. And but it survived, right? The internet survived and it came back and it's really become a core component of everything that we do today. And I think maybe AI will have a similar experience where it's being overvalued right now. It goes through a downturn and a crash, and then the true value of it comes out, where the tools and the components that are truly valuable and do add some productivity, those are the ones that will continue to be quote unquote bought or developed and will become valuable in the future. And that's where AI will really take off, is once we've trimmed off some of the fat. So I like to compare it a little bit to the NFT bubble that we all went through like just 2-3 years ago, right? Like NFTs, like remember that?
Nobody talks about them now. Yeah, what is
nobody
that?
talks about them now, right? Like some
True.
of the valuation on those things, it's like, how do you know if you got a good deal or not? Like, just because you outbid the other guy doesn't mean that you got a good value. Like,
True.
Now we kind of know what the value is. And to your point about that Henry Blodgett that you shared there, and what was the name? Tom Lee?
Tom Lee.
Yeah.
Yeah, the perma bull guy.
Yeah.
I know, like, there's people that they pay tens, hundreds, or even $1 million to promote the space so that they can pump it up and find buyers for it and tell you why this unicorn NFT is valuable. I remember I was on a Spaces. This is back when Twitter was fun. They had a Spaces on this NFT about dragons, and they're coming out with this limited edition 20 set dragon. And I was on the panel, and like, you know, they're obviously promoting this, and I'm like, you've got to be kidding me! Like, we're not promoting NFT dragons, and then the dragons will lay an egg, and then you can grab that egg and stake it as passive income. And every day that egg will generate 2 mini eggs. And then once you have 10 mini eggs, you can put those together into one more bigger egg. But if you want to make it go faster, you can pay $10 or $20 or whatever and buy more solid eggs. I'm like, what is?
Wow.
How is this legitimate? You know, and like anyone with, I don't know how many brain cells you need to have in order to put that one together, but you know that the value of that is nothing. And that's going to play out. And it played out. And NFTs, nobody even talks about them anymore.
True.
Right? And if you do own one, you don't talk about it and you're embarrassed. You don't even bring that up at Thanksgiving dinner.
Right.
I'm not going to share that.
Oh, another soul.
Right?
You're right. That's true.
And so, like, when NFTs were going really, really like hot at the time, I got some questions at the time. Are you going to buy one? Are you going to make one? What are you going to do? And I'm like, you know what? I think I'm just going to pass for now, and I'm going to wait for the next leg up. So I did give NFTs the benefit of the doubt of, hey, well, who knows? You really could actually skyrocket in the next cycle. You could actually, yeah, I agree on some of the things you have there in terms of proof of ownership of a unique thing, be that a concert ticket or be that a piece of hardware for your computer, that this has been legitimate and wasn't confiscated or made in China and it's a knockoff. But I'll give it a while and I'll come back on it. And I'm glad I didn't, because now you can see everything just in shambles. Okay, what does this relate to with what we're doing here? I think AI is going to go through a similar thing, but the value of AI will surface, and then that'll be a great chance to jump in on that and really go hard on it. So, yeah, that's my thought on it. So where are we going to go in 2026? Kyle, this is coming back to your question, and then my apologies for being long-winded on it. I think 2026 will be a good vetting period of AI, if it's going to continue to deliver value or not. I think it will pull back. I don't think there'll be a crash. I think it'll be just a pullback or just a meh or a nothing year. Nothing really happens. Nothing really, maybe some volatility in there. There's a couple of names, like you were saying. Uzi come out and say, hey, we're not going to buy this chip anymore. We're going to slow down. So whoever makes that chip, if it's Broadcom or if it's Google, they're going to take a hit for a little bit, but maybe some of the others will continue to surface or stay strong relative.
Right, rotation.
Yeah, exactly.
I think next year will be a big rotation year. I think it'll end positive, but back to the 8 to 10% mean.
Yeah.
I don't think we're getting another 20%. This year,
right?
Like,
Yeah, it's been so fantastic for the last 2-3 years, right? Where it's like, man, you just put this money in and then 20%, 30% paying, you got this. Right. There's nothing wrong with having just the index do 0, 2, or +2 or -4%. Nothing wrong with that at all. It's pretty healthy for the market just to cool off a bit.
100%, I agree, and we'll still be able to hopefully, do what we do, meaning in premiums, mostly premium selling, and then when something does get overdone, whether it's to the downside, we can then go directional with, like, let's say buying some calls or butterflies or broken wings, whatever. But I think our opportunity to keep doing 20 to 30% will be there, but like you said, the market won't be producing that for every Tom, Dick, and Harry,
For sure.
Right.
One other thing, so besides the chart being similar with the breakdown candle, is pre-tariff, and I had gone through my post in February on the Discord, because at the time I wanted to lay out bullet points for what had built up to that point, and this was before the major sell-off. But high beta momentum names had already been destroyed before the SPX actually dropped. Bitcoin destroyed. So the same thing is happening now. That's also another point that I have in my list.
So did you say Bitcoin's been destroyed? I didn't think those two words are supposed to go together. But Kyle, you're pretty bullish on Bitcoin long term, I thought, aren't you?
37%, and that's pretty destroyed for a lot of people because people are levered now. That's why.
Okay, so you're talking about like when it was 126, 124?
Yeah.
Okay.
And so earlier this year, that's what I'm saying here, Bitcoin topped before the market, and so that's what's happening again. And again, high beta momentum names also topped.
Right.
And we've just seen 50% sell off on Oklo, on the nuclear names, quantum names 60-70%. So there's just another data point to be cautious.
I noticed you're on Regretti. You have a covered call on that. Maybe just
I do, yeah.
through some of your trades of late, Kyle. I was looking through your trade alert posts of late, and they seem to be a lot of covered calls, like on Tesla.
Yeah, I'm not really opening a whole lot of positions right now. As
You're
the
not
market's
opening a whole
up
lot of new positions? No?
just covered calls, maybe some cash secured puts. But I'm more just kind of watching here into the end of the year. It's not a time to be a hero.
But cash secured puts are pretty bullish, though. Like, you could get caught on that one pretty bad.
Yeah, they are. They can be.
Yeah.
If you sell into high IV, like on a massive downturn, you get a lot lower. So it depends.
The high cost basis trying to sell out of that one.
Right.
So it's funny how, like, you and I are both in this Rigetti at the same time. I got the 28 covered call on it, and I think yours is a 31 for January.
Okay, I didn't realize.
Yeah. So it's kind of funny how people think that we all kind of work or trade together. There's a lot of
it's too much, man. We can't handle everybody else's trade. Yeah.
I did a roll today on Tesla, and they're like, "Oh, hold on, just wait a minute," because Kyle's got a call a 470, 480 call debit spread.
Yeah, for the 19th. Yeah.
Yeah, and because I was doing a call credit spread on the same with almost the same strikes. I'm like, I'm completely opposite to you.
Oh wow,
that made me laugh. Yeah, I'm like, huh. I'm like, well, yeah, I can't. That would be way too much to kind of think in and analyze where everyone is on positions, because we all trade the same names.
Right.
Yeah. So we'll get to see who's right on that one, Kyle.
Yeah.
Let me ask you guys, just for another laugh, if you guys want to have a laugh, have you ever looked at someone else's trade and go, "Damn, I wouldn't want to be in that thing"?
No, I haven't. No, and I do.
I haven't either. I'm just asking because sometimes if you do look at someone else's trades, you go like, "Hey, that looks like a great trade," or if they're managing it, it's like, "Damn, I wouldn't want to be it." Only because you know how tough it is to manage trades.
Yeah.
Just like you're fighting uphill.
Okay, no, you guys definitely would have been. Okay, so one of the trades that I guess a lot of members did not like that I did was SPX. I put a 100-point put credit spread on that, and it was in the money. And I think I got a lot of comments on that. One member said it's pretty egregious for you to put on put credit spread with a 100-point difference on it. That's 10 grand. And I hear what he's saying. But I mean, at the end, we'll see how it goes. If it's profitable, it's profitable, and we'll go with it. So far, it is. It's just the 6750 is the short put, and so with us at 6800 plus change, it's doing well. But they didn't like that. So I was just curious if you guys saw that and if you thought that was also a bad trade with the.
No, I actually missed that one, man. No, I didn't see that one.
Nope.
Yeah, they were pissed. Like, it was like a team revolt. I'm like, what? Come on. I don't
know. We all have our one that we feel. Well, not even. I mean, you felt strongly about that trade, just like when I was shorting Hood at 50. I thought I thought he was going to pull back. It went to 150 on me, but getting close to getting out of that thing green. So that's all that matters.
Yeah.
Managing it as best you can until you get out. You know what I'm saying?
So you sold a call at 50 on Hood?
I sold a couple of them, not just one.
Okay.
And listen, I've been fighting that thing like for my life. And whoever's in it with me, we're fighting that, but we're doing all right. But this way, we're up about my account's up $7 grand on it if everything closed right now.
Yeah. Okay, great. Yeah.
Still got to get out of the 9 puts that I have. But as it's been going up, Stephen, I guess you have been following it. I've been rolling.
But no, I loosely, because I keep on seeing you post about Hood. Yeah.
As I've been rolling up the cover, the naked calls, because never got assigned yet. But as I've been rolling up the naked calls, I've been selling more cash secured puts and such and such. And I just sold recently. Listen to this. I had sold 1,000 or 10 contracts at 125 covered calls. Listen to this, not covered calls, naked calls, because I now have. We got out of the calls. That's what happened. Finally got out of the calls, and now we're just short 9 cash secured puts. But because it doesn't use any more buying power, I've been selling calls to make now another strangle. Right. Hood went down to 102. We had 125 strike naked calls. In a matter of a week, it retraced all of that and went past 125. So I had to roll the 125s to 130, right? And listen to this. The next week it blew through 130. But what I did was got smart on Hood. I bought shares. I bought 1,000 shares at 129.96.
Okay.
So this week, listen to this. This week,
Yeah.
we're going to keep the premium on the 130 covered naked calls. We're going to make money from 129.96 to 130, which is only 4 cents, but it's on 1,000 shares. So we're back out of those naked calls, and now all we have, now all we have to do is get out of 9 cash secured puts at 135 and 139.
Nice.
But I say this to say that. I say that to say this. That SPX trade, you'll probably wind up making that a profitable trade. It might take.
Yeah, I will for sure. It might take me a little while. If we just have until December 26th, so if we can have SPX above 67.50 on Boxing Day. I don't think you Americans know what Boxing Day is, do you? Do you know what Boxing Day is?
I've heard of it, but I don't know what it is.
You've heard of it, but don't know what it is.
I think I may have looked it up once in my life, but I forgot.
Hey, that's more than some. It's December 26th. It's just the day after the day after Christmas. So that's when it expires, and hopefully that'll be it, and we're out of that one. And it'll be a $750 profit per contract on that one.
Nice.
So if it works out, it'll go really well. But I think what happened is the members were just pissed that it went to 10 grand of margin on that one very quickly. Because we look at the S&P 500, we say, "Oh, this is a great index," and it is. But I don't think members know that like SPX is a monster of a trading instrument, right? Like if you had one contract, you're playing with $500,000, 600 and some odd $1,000. So yeah, that's how you get amazing premiums when you're just trading a short strike width. But it's because you're playing with millionaires in there, right? Like they're moving massive amounts of wealth, or they're hedging a massive portfolio, and they need to have a strong contract to go with that.
Right. Yeah, this VIX, man. I was thinking about it. Look how low this thing's gone.
Wow. Yeah, that thing has been.
I have a little falling wedge here. I don't know.
Okay, so one of my favorite trades to do is when the VIX spikes, like you have there with that God green candle there.
Yeah.
Is to put a call credit spread on UVXY right above that. Have you guys ever looked at UVXY?
I have. I've tried it in the past.
Yeah, so bring that one up if you can.
Yeah.
And then zoom way out. Zoom out way out on it. Look at that baby. Keep on going. It never ends. Is that all time?
No, that's all time now. Yeah.
Yeah, it never ends going down.
Right.
Wow.
So what you do is you put a bearish call credit spread against it when it spikes, so you get a good premium on it, and then you just wait for that thing to deteriorate. They just keep on reverse splitting it. See all those S's on the bottom? Those are orange or yellow S's. Yeah. Those are reverse splits. They have to continually reverse split this thing to get it back up, and so you can eventually you'll make money on it. It's just a matter of time.
Good to know.
On the big spike, that one we just saw, I tried something I haven't done before. I bought some SVIX shares. Because SVIX is short VIX, so it worked out. It obviously that was the big green candle, and it's gone up quite a bit. In fact, it's 100%. Yeah,
nice.
I mean, I sold out some around here, but so I'm going to start trying to do that whenever we see a massive.
Whenever you see a massive, because UVXY is the worst ETF that was ever created. No, I'm not kidding. There's been studies put on about this is the worst investment vehicle that's ever been created. It's negative. It's inverse the VIX, and it's 1.5 times.
I'm surprised they've kept it alive.
Sorry, no, it's bullish. It's bullish. It's not bearish. It's you're putting a bearish trade on it. No, because it does work when it's like 1 or 2 days, but you got to get out because eventually it'll go to nothing, and then they reverse split it so it goes up.
So let's see. Yeah, if you were in at this time, 1,000%. This was 2020. Okay, that makes sense. So that's COVID. But yeah, you have to be in there at the right time though, and it decays if you're holding and holding and holding, waiting for that one time. It's going to decay.
Amazing. That's some swoon on that chart.
It's the funnest trade. It's like it doesn't matter. We did it last time when Trump announced the tariffs. We put that one on. I think it was up to around $50 on that one, or 50 points. So we put a call cover spread on it. We did have to roll it, but it eventually collapsed, and there it was.
Wow.
Nice.
Yeah, I don't know if you saw
Real
my.
nice.
I think maybe you liked this one. My channel on QQQ that goes back to 2018, and every time
Nice.
it's hit. But I've been learning. I love Fibonacci retracements, but I've been learning Fibonacci extensions, which can kind of give you a range of where things can go up to instead of where they go down to. And so on here, I did 3 different Fibonacci extensions because let me get this volume off here. That's why I don't like volume. It's in my way. There we go. So you take it from a trend leg up to the top and then to the bottom of the wave down after that, and then extends up. And you can see this one extends up to QQQ 636.31. We're at 6. We closed today at 625.69. So that's close. So then I was like, okay, let me try it from the next leg up, which was from the 2022 bear market lows to the tariff highs, and then back down to the tariff lows. That one has a 78.6 extension at 628.86. Again, very close. And then
Kyle, excuse me 1 second. Is that the 261 extension? I can't see. Sorry.
786.
Oh, 786. Okay.
Extension, yeah.
Okay.
And then I did it one more time, which is from the April low to the most recent high, and then to the most recent low. And that was right up here at, it's 100% extension, of course, at 637.01. So based on those 3 fib extensions, this is a massive resistance area that it's going to be tough to break above.
I'll tell you, the SPY was, as I was trading, SPX. SPX looked like it was threatening, like it wanted to take out all-time highs today. It looked like it was going to push through the 16, I forget what it is already, 930, whatever. It was looking this morning, right out of the gates, it was pushing higher.
Right. Same here. QQQ gapped up into that resistance zone and then failed below.
Yeah.
QQQ is lagging the SPX, so that's kind of interesting.
Tech, right?
IWM is actually put in could be a double top. It actually, so I had this channel and I showed the breakdown. It's actually gone all the way back and retested. So if IWM does break above here, we could have another massive leg higher. On small caps.
What do you think it would take to do that outside of like a black swan on that? Just lowering interest rates on small caps? Yeah.
Probably if it's a dovish rate cut. So if they do the rate cut, which I think is going to be the 25, and then they say, okay, we're going to be more QEs coming back or whatever, that could really ignite. Okay, let me see what that fib. How much it retraced. It retraced 23.6 on this sell-off. Yeah.
All right. Well, why don't we end it there, Kyle? We haven't had any questions. Nobody's come online with us to ask us anything. We can end it there. It's 5:00 Eastern out there for you guys. I think we'll get together on December 19th. That's the next one that we're going to have of these, the office hours after the market close. That'll be kind of like the holiday edition, and we can go over kind of what our year was. Kyle, I want to talk to you about your year that you had, and also yourself, Uzi. I know for yourself, Kyle, it was off to a pretty rough start at the very beginning, not from a trading result point of view, but I know we had that one conversation, you and I, just talking about the tariffs and some of your thoughts and stuff on that. So I'd be curious to see, just kind of in retrospective, how the year 2025 worked out for you.
Sure.
Yeah. And just any other trades too, Uzi, want to know about how you're doing with Hood. Hopefully it's all closed out and you're in the good solid green there. So we'll go from there.
There's a couple of troopers from the group that are in with me, and I
Right? Yeah.
every day I say to myself, I wish they weren't, only because it's been tough. But the lights, we see the light at the end of the tunnel. And
Yeah.
that's the only thing that matters to me. Like,
Yeah.
getting myself and whoever's in it with me to green, and then learning from it. And I'm gonna never put myself into that position again without doing what I did now. He said, so here's the trick, guys. If you're gonna short calls, it's fine. You just have to be prepared to buy that stock before it blows through the short call, and then you've just got a covered call. I should have done that. I just didn't think, because I said Hood. Come on, what's Hood gonna do? It showed me what it could do. So
Okay.
Any name.
Okay. Uzi, just as we close off here, there was a guy. Remember when like NVIDIA was just kind of like, what are you guys gonna do after GPU mining's done? Right? And they nobody had a very good positive outlook on NVIDIA. It was like, what are you guys gonna do? Some server stuff, or maybe invent the next gaming thing, maybe a virtual reality gaming. And then all of a sudden they start coming out with this AI story. And then the AI story. Then the AI. Then their stock just went parabolic.
Yeah.
At that point, there was this guy. I forget what his name was, but it was a really weird name. It was like Gay something or other, a Gay Shorter or something. And he even had a whole Discord about why he was going to short NVIDIA. And I wonder how that guy's doing now, because NVIDIA has gone like ever since he said about his short positions, probably 10x since then.
Wow.
And every quarter is just blow off like amazing earnings and revenues coming through. So not everyone, what's Hood going to do? Yeah, that's when you're thinking, what's NVIDIA going to do?
No, I will never underestimate another stock again. And I've been short calls and it goes against you a little bit, but then it always comes back. But Hood just never looked back. And then everything started to mushroom, like, oh my God, everyone wants to own Hood. And then they're getting involved in this and then that. And it's like the doors were opening up. And before I knew it was at 75, I'm like, well, I can't cover now. And then let me just, but yeah, no, it's, we all, we live and we learn. But going forward, if any of you guys ever do short and your short calls, I mean, it's simple. Just buy the shares before it gets through, if you can. If it gaps through it, then you kind of screwed. But if you can, and I had all the opportunity to buy the shares, I just didn't. That's all you have to do, and then you have a covered call position, and then you're out of your danger.
Right, that's good. Yeah, good tactic. I try not to short calls. I've done it by accident a couple times, and it worked out. Because my tasty trade allows me to just sell way above my margin.
All the brokers will allow you to do it. It started out as a strangle, and I love strangles, and they have a very high probability profit. But to defend your short call, you either have to close it, take the loss, or my go-to now is just going to be covered by those shares. And even if you get stuck with the shares and the stock closes below the covered call, well, you keep the covered call premium, and you have the shares. But if it's bullish and it's been chasing you to the upside, it's probably going to continue. So now at least you bought your shares, and now you can just sell covered calls on the shares until you get out, which would have been the smartest thing I would have done. But again, just a little food for thought going forward. We don't have to find ourselves in these positions if we just be proactive instead of I dug my feet in, and I'll never do that again.
That's good. Awesome, guys. Well, thanks for being with us. Everyone who shared a comment, Brian Robson, thanks a lot for that. And we'll talk to you guys in a couple of weeks. December 19th, we'll be here again and do a holiday sign off. Thanks a lot for being members of CFU, and we'll talk soon.
Okay, guys.
Right, take care.
Have a good weekend.
Have a good weekend. Yeah.
Take care, guys.